Johnson, we're just seeing the GIPO function. If you're looking at it, initially those shares fell in after-hours trading, but now popping slightly higher. Second quarter was never going to be too bright, but it seemed to be in line.
Second quarter is often a tough one for Cisco, but this is another sort of the slow turn that is Cisco as they move more towards services. Well, it's always been a part of them, but more towards security, more towards software, and you see the turn in their business. I think, but when it comes to sort of earnings surprises, Caroline, you know that that's a phrase that gets the hackles of my hair up, and Cisco is the poster child for managing earnings. If you go to my Bloomberg terminal, you can see we've got this great command called SURP, short for surprise. And if you look over here at this column, what is it? This sixth column over here, it shows the percentage of surprise. This is the adjusted earnings per share. If I scroll back through 2016, 2015, 14, 13, 12, 11, see, it's all green, 9, 2008. As far back as we can see, Cisco has quote unquote beaten its earnings per share estimate when it comes to adjusted earnings. So the fact that the company beats by a penny is so meaningless with this company because they manage expectations and they manage their guidance and they manage Wall Street so well. You really got to look under the covers to see what's going on at Cisco.
And you look under the covers, you type in EM on your Bloomberg function, and you'll see that with four quarters we're seeing a basically declining or stagnant sales.
Yeah.
Where are they
sales,
struggling?
Exactly. One of my very favorite commands, EM sales, and it does show you this turn at Cisco. So when you see that decline in sales, when you look at 6 quarters of sales numbers, you can look at it in terms of sort of billions of dollars, and the numbers are big. But what we see when in terms of the percentage changes, and I think we've got a chart of that too, the percentage changes in Cisco's sales, you can really see that turn. You can see the decline in sales despite billions of dollars in acquisitions. What's eventually happened with this company is you see a decline in sales that we really haven't seen historically with Cisco, except in times of enormous distress in the overall economy. And one of the reasons you're seeing that in the quarter that they reported today is indeed a slowdown in the service providers, in the phone companies who are big customers of Cisco's, just not spending as much on infrastructure, and that's hitting Cisco where it really hurts.
And of course, they've been struggling to get into the software side of things. Hardware's been slowing down. Software is where many are saying you need to make acquisitions if you're going to be really pushing forward in the software-based services area. They've been making acquisitions. AppDynamics was one of them that blew us all away, but perhaps not quite the right ones.
Well, look, Cisco has done better than any of their big box slinging competitors. And compare this to, say, the Sun Microsystems business that's now Oracle's hardware division, or IBM, or God forbid, Hewlett-Packard. I mean, all of these companies have face planted. I mean, go back to their old competitors. Look at, where is 3Com now, right? Huawei, a company that's doing okay, but nowhere near as successful as Cisco is at managing this transition. We are in a very different world of technology right now, where every company doesn't have to build their own data center. They don't have to have their servers in their back room. They don't have to have all the kinds of computing infrastructure that was the great stuff of Hewlett-Packard, IBM, I forgot, Dell, of course, Sun. Those businesses have really face planted while Cisco is managing, it seems, this turn into a business that's driven by the cloud, driven by software, and a world where Amazon Web Services, Microsoft Azure, Rackspace, and Google are starting to build really big business about providing computing power on the cloud so companies don't have to do it themselves, which would have hurt Cisco a lot more had they not been better prepared for this. But they seem to be quite well prepared for it. Their services business is doing very well, and I think that's why you see the market's not freaking out about these results.
And we actually just can hear from the CEO, Chuck Robbins, who's been taking to the analyst call, and he discusses that recent acquisition of AppDynamics.
We were very pleased to announce our intent to acquire AppDynamics as a continuation of our strategy to provide customers with deep analytics across the data center, the network, as well as their applications. Increasingly, customers are seeing significant business value being delivered through applications and accessed through intelligent networks.
So, Cory, talk to us about the third quarter, because we're still seeing shares up in after-hours trading, now up more than 2 percentage points. Third quarter looks a little bit like it's going to be a tough old road for them still. When do we see the real dividends start to pay out? Mind you, dividends missed as well this time.
Well, dividends, a dividend increase, though, for this company. So I think what you see is the stewardship of cash there has been pretty good. I mean, they issue a lot of stock options as they do all these acquisitions, but they're also throwing off more and more free cash flow, so they can sort of afford to do that in a certain way. But I think, again, this is a slow turn. It really does look, if you look at this, a number that I really think is interesting with this company is sales per employee. Here in the midst of all this turn, you've got this really big sales staff out there. But in terms of sales per employee, things have been pretty consistently good for Cisco, and they get a great deal of productivity from those employees, and those numbers have generally been better over the course of the last few years. And that's an important metric for Cisco because they do have an army of salespeople, of service providers. They're really getting close with their customers. They know what their customers want, and it seems that management responds all the way to the top of the business there. They've also, over recent years, going back 3 or 4 years, stripped out a lot of layers of senior management, helping them respond to customers more quickly. And Chuck Robbins taking over for John Chambers as CEO, it seems like it's been a very smooth transition in a thing that can really be a big problem for some companies.